Good morning, this is Gurung from Beta 2 Limited. Today I'll be focusing on the fundamentals of major currencies out there. Now Beta 2, as you're aware, are predominantly technical traders. 95% of the trading we do are based on technical indicators. However, our traders also occasionally, or at least bear in mind, the fundamentals behind major currencies when looking at the overall bias of the portfolio. So in order to describe the fundamentals of major economies at the moment, I will do it by basically looking at the sort of major FX pair in a magnet form, right? So if you imagine a magnet, you've got one side where you've got currency which is expected to appreciate, fundamentally this is, and the other side depreciate or remain weaker. Now basically what dictates the fundamentals is basically the central banks at the moment either looking to tighten monetary policy or loosen monetary policy. So if you look at the major currency pairs, you've got US dollar, pound, Japanese yen, euro and Swiss franc. You also have a few commodity currencies, like Australian dollar, Canadian dollar and New Zealand dollar. So if you imagine this magnet where you've got tighter monetary policy, weaker monetary policy and obviously neutral in between, you've got economies like US and pound on one side where they're looking to tighten monetary policy over the next year or 2 years. First one being the US, where the market's expecting an interest rate increase of 0.25% before the end of this year. So fundamentally, right now, the US dollar is the strongest currency pair. It's then followed by the pound, where an interest rate increase of 25 basis points are expected by mid next year, but nonetheless, they are looking to tighten monetary policy. On the flip side of the coin, you've got economies like Japan and Eurozone, where they're still having a looser monetary policy. So Euro being the weakest, as they've just started to loosen monetary policy a couple of months ago, and yen probably second weakest from a fundamentals point of view because they've got ongoing QE started last year. And then you have in between economies like Australia, New Zealand dollar, who have a bit of a neutral bias, but maybe towards sort of a bit more monetary loosening policy, because, for example, New Zealand dollar has just recently cut interest rate. They're not looking to obviously cut any further, but remain, or expected the interest rate to remain lower. Similar with Australian dollar, they have fairly loose monetary policy as well. So looking at the fundamentals, you've got US, UK looking to tighten monetary policy, you've got Euro, Yen loosening, further loosening of policies, and you've got Australian dollar, New Zealand dollar, Canadian dollar to retain loose monetary policy. So moving into the second half of 2015, this is the fundamentals of major currency pairs, which our traders will bear in mind when they're obviously considering biases in their technical portfolio. That's it for today, ladies and gentlemen. Thank you very much.